Time to begin this session. I am in Geneva, joined by some people in the same room here. What we're going to start with is we're going to start with Matt Strauss, and then we're going to turn to three other people. So Matt will get us started, describing things about this bill, where it stands, what the next steps might be. But first, Matt, if I may suggest, if you could tell us something about your boss, I think that would be useful for us all to hear. So you want to go ahead and start with that, please?
Sounds good. So yeah, as Charles said, I'm Matt Strauss. I'm Congressman George Holdings' tax counsel, and George is from North Carolina. He represents the 2nd District there, which is right outside of Raleigh. And I've been with the congressman now for about 4 years, basically ever since he got on Ways and Means Committee, which is the tax writing committee here in the House. And so the boss, basically, ever since he got on the committee, has been pretty interested in this issue. His wife is actually English, so he's gone back to England a bunch to see family, and as he kept going over there, he kept hearing from Americans abroad about the problems that they were having in the tax space, and kind of came back and tasked me with looking at that, and we've been digging into this ever since. And finally, at the end of last year, we got a bill out with the help of ACA and a number of other folks who I cannot thank enough for all of the work that they've done to get us to this point. But it's still obviously a work in progress. I mean, we've gone through a number of proposals and ideas to basically even get to this point where we got a bill out. And I mean, we view this as very much a first step, and we're still hoping to introduce again this session. And we're working right now with Legislative Counsel and the Joint Committee on Tax, who does all of the revenue estimating, to tighten down a few things in this draft, and we're hoping to get that back and get that out here relatively soon so that we have something else to point to. And we hope that also can be bipartisan. We're working with a number of other Ways and Means offices in the House, both Democrat and Republican, to try and socialize this issue and see if we can get them on that. But we also count on ACA and the folks listening here to help us get some of that support. So we really can't thank you guys enough either for really highlighting this issue and helping us get it to the point where we can hopefully get this thing across the line. So the bill that we introduced at the end of last year basically would create a new section 911A that non-resident citizens may elect to be taxed under. And we sort of put that under there for a number of reasons, but that basically is us sort of trying to piggyback on the foreign earned income exemption to create this new system whereby non-qualified resident citizens will basically no longer be taxed by the United States on their foreign sourced income while they are considered a non-resident and resident abroad. Under this new 911A, this new system, they will remain subject to tax on their U.S. sourced income, but everything that is foreign source will be exempted. In order to be eligible for this new status, one has to be a non-resident citizen, and per this bill, we sort of made it as you are a citizen of the United States, you have a tax home in a foreign country, you're in full compliance with U.S. tax laws for the previous 3 years, and we will sort of provide a glide path to that through regulations that will help folks that are out of compliance come into compliance, sort of what they did with FATCA. And then finally, the non-resident citizen must establish that they have either a bona fide residence in a foreign country or that they have been present in that foreign country for at least 330 days in a full year. Both of those are similar to the qualifications that you need to meet in order to elect the 911 foreign earned income exemption. And so once an individual meets those qualifications to be a non-resident citizen, he or she may elect then this new 911A treatment, which is essentially residence-based taxation. Your foreign earned and unearned income is no longer taxed by the United States, and you will not need to file a U.S. tax return on that income. Any U.S. source income will still remain taxed by the United States, and this will include sales of real property, sales of personal property, dividends, shares of stocks, basically anything that is a U.S. asset that you would sell would still remain subject to tax by the United States. And I think the one other big issue in this that will actually need to be cleared up a little bit down the line is that your foreign personal property that you held prior to becoming a qualified non-resident citizen, electing this new 911A treatment, will be taxed to the point that you ended, will be taxed from the gain when you bought it to the point when you elected it. So any gain that is realized while you were a qualified non-resident citizen will be excluded, but any that is attributable to your time as a resident, as a U.S. resident citizen, will be still taxed by the United States. But other than that, I think that this is a pretty clean way to do it, hopefully, but we definitely need your guys' feedback on that part. And then as to next steps, we are still working with the Joint Committee on Tax and House Legislative Council to work through some of the trickier issues on this, basically timing issues. How do we define personal property? Basically a whole lot of really technical stuff that they are really good at to try and make sure people don't abuse this new system. We're tightening up a few things here, but we hope to have that finished pretty soon. Then we're going to go back to some of our other supporters here on the Hill, run a few ideas by them, and hopefully we can get them to sign on as bipartisan co-sponsors when we introduce this thing. And then we will be working with ACA, Republicans overseas, Democrats abroad, a number of other AmChams to try and help get additional co-sponsors on this bill. And from there, we'll try and leverage those co-sponsors as well as ourselves to ask the chairman of the Ways and Means Committee for hearings on the bill. Hopefully we can really get this idea fleshed out in the public and get it the attention that it so rightly deserves. And we'll also be asking the Joint Committee on Tax to do a revenue estimate on the bill in order to, one, see what this thing costs us, and two, have that for whenever we need to mark up this bill, or if we could stick it in a larger bill. Basically, all tax bills need to have a revenue estimate attached. So that's going to be a pretty key element for us as well. So I'm happy to take questions too, or however Charles wants to do this.
You want to say on that last point, there's a rule, if my recollection is correct, and I think it would be in place with respect to this legislation, that if a tax bill like this one loses revenue, then the proponents need to show how they are going to make it up. I didn't say that very artfully, but and I can't remember the shorthand word for that rule, but it's been around a while. Any thoughts or anything to say on that?
Yeah, so the House does have, and the Senate has this as well, a pay-go requirement, essentially saying that if a bill loses revenue, we need to find another way to pay for it, and they offset it with, usually in this case, other revenue increases. But there's a statutory pay-go rule as well, but that is much more complicated and doesn't usually come into consideration for these things. But with regard to the House and Senate rules on these, they can be waived since it's simply a House rule. I think in our view, we want to make this as close to revenue neutral as possible, just so that we can eliminate one hurdle to getting this thing done. Because, I mean, as you guys know, this is an issue that has been, I don't want to say ignored, but maybe not watched as closely as it should be by folks here in Congress. And so we want to sort of take away any excuse that they might have for not paying attention to this. So I think one key component of that is try and make this as close to revenue neutral as possible so that they can't throw a procedural hurdle like pay-go requirements at us.
Okay. Close to the same subject, on hearings, if I'm recalling the general, how this works, of course, you've got the House Ways and Means Committee, and then there's a subcommittee on taxation, and there's a chairman of the big committee. But my experience, which may be out of date, is that that decision is really made by the chairman. But the chairman looks around and asks everybody on both sides, you know, what do you people want to do? So it's arrived at after people talk around. That's not very elegantly put, but can you speak to that subject?
Yeah, you're right there. The chairman does sort of, in conjunction with leadership, but he gets pretty big leeway to sort of set the agenda for the committee. And one way he does that is through hearings. And they usually try and follow, I guess, some sort of overarching theme on this. But at the subcommittee level, there is a bit more leeway often to really dive more into discrete issues that may not fit with their overarching theme, but nonetheless deserve the attention of the committee. And I think that this issue is one that could fit either in an overarching theme that they have of re-examining the tax code, or at that tax policy subcommittee level of simply digging into, if not just the problems with Americans abroad, but problems with the international tax code writ large. So I think that there's opportunities there for us to really hopefully dig into this with the committee. And if we can get this to be bipartisan, as we hope we can, we think that we have a good shot of being able to leverage that to ask committee to really bring this up in a way that allows for a healthy discussion versus sort of sometimes the political theater that House committee hearings can become.
You might, since a lot of people are not familiar with how things happen up there with members' offices, Joint Committee on Taxation, Legislative Counsel's office, the committees themselves, House Ways and Means Committee on the Senate side, the Senate Finance Committee. That's second nature to you, but you might just take a moment and give a quick review of how that works and who the players are, please.
All right. Yeah. Okay. Feel free to jump in here and redirect me at any point too. But yeah. So I don't know how basic to get here, but each member obviously serves on a committee. So George is on the Ways and Means Committee, which has jurisdiction essentially over all taxation, other things as well, including trade, Social Security, Medicare, or Medicaid rather. But taxation is the big focus of Ways and Means, and so any tax bill that is brought through the House has to come through Ways and Means Committee. So it usually helps if a member of Ways and Means Committee is the champion of the bill, because it gets a little bit better look going through the committee. And so then within the committee, you have the committee staff that essentially works for all of the members. There's majority staff and minority staff, and they sort of guide the I guess view of the committee. They work directly for the chairman and basically make sure the agenda that the chairman wants to set is being ushered through, and they hold a lot of power for staff members. So in formulating this proposal, we had worked closely with our committee staff to make sure that we were putting out something that they could be comfortable with, that the chairman would be comfortable with, then Chairman Brady would be comfortable with, and something that they were comfortable would not be open to abuse, nor against the larger efforts that we were trying to achieve. And so, aside from them, the folks that actually draft the bills are legislative counsel, and they work for the House of Representatives in a completely nonpartisan way, and they help us make sure we have everything formatted correctly, make sure we have every policy lined up in a way that actually goes with the code, and make sure we're putting in place something that is actually able to be administered. That was sort of one of the big issues we had when we were doing this. I thought this would be easier to draft, and had to go back and forth with Leg Counsel a few times and figure out how to start this thing, because airdropping in a new section of the code was not as easy, apparently, as one would think. They prefer to piggyback off of other sections of the code and make sure that the IRS has a way to administer this thing, which was a fascinating look at this. And then you got the Joint Committee on Tax, which again does all of the revenue estimates. But aside from that, while they're not supposed to set policy, and they're supposed to be bipartisan or nonpartisan rather, they do sort of have the effect of setting policy sometimes by pointing out areas that they see as potentials for abuse or potentials for revenue loss. And often we've seen in tax policy that sort of look towards the score can sometimes guide policy more than the actual idea, which is probably not the best way to do policy, but they sort of hold a lot of sway there, because they don't necessarily tell you how they have scored something. They just tell you that they scored it, and they'll give you hints, which can be frustrating, but ultimately they're a very, very useful tool. So those are basically the big players here.
And you mentioned the desire to keep an eye on compliance, on the possibility of abuse of some rules. And I'm going to guess, but you speak to this if you will. The people at Joint Committee on Taxation and some of the other committees, without getting into the policy, if your boss tells them that he wants it to be tight against abuse, it's my impression that they really know how to do that. Any thoughts on that?
Yeah, they certainly do. And I think they sort of also see themselves as almost protectors of the code in a way, which is, somebody needs to do that. So it's useful there. But sometimes their tight against abuse is not another person's tight against abuse, is the way I'll say that. Sometimes they worry about things that would seem common sense to others, or take things into account that are common practice, but they view as large loopholes. But for the most part, they know where all of the pitfalls are. I mean, they have really good subject matter experts over there that are able to find that hole, or find that path through where somebody could hide some income, and they're able to shut it down, usually in a pretty effective way that doesn't hopefully come with too heavy of a hammer. But they're extremely impressive folks.
Okay, I am now going to attempt to pass along some of the questions that have been sent in. And apologies to the people that are posing this question if I don't do this as smoothly as I should. Earlier today, I got a series of questions, probably 3, maybe 4, from a very, to me, seemed very knowledgeable person because of the degree of detail that he was jumping into. I did pass those along to you. I want that to be shown in the record. I passed those along. They are very technically very detailed questions, And I'm going to suggest that we not try to give the answers to those very detailed questions off the top of our heads here, because I've got several others. But you have those questions. If you're just dying to dive into that degree, I don't want to cut you off. But I'm going to suggest that I pick through some of the other questions that may be a little broader gauge. Is that okay with you, Matt?
Yeah, that's great. I opened one of those earlier before I jumped in another meeting, and very good question, and something that is very much in the realm of working with JCT to make sure we have the right answer there. I think those are some of the things that we're trying to dial down on to make sure we have the right definitions of personal property, for instance, and where that line is. So yeah, I'm happy to also talk with anybody offline about any of this. If there's more technical questions or if there's any need for follow-up, I'm happy to circle up with anybody, because we really appreciate all the help we can get.
Yeah. And because you've said before, also, if people want to send you emails listing the questions and the technical issues and so forth, that you are, in fact, gathering all of those and sort of assembling them and going back and forth with others, including Joint Committee on Taxation. So all of these issues get on the table. So now turning to one of these, I'm not throwing out the names of the people, but so here's a question. Understand the importance of the revenue estimation on the bill. Is there an appreciation on the part of Congress that the tax base has been eroding as citizens abroad renounce their citizenship? Thoughts on that?
Yes, I think there's an appreciation, at least on the fact, at least on the part of the boss. I think this is a point that we've been trying to make to the Joint Committee on Tax. So when we were doing tax reform, this was even before the law was enacted. We've been doing hearings and stuff for a while on a number of different proposals. And when we were actually trying to calculate the dollar amount for repatriation, we actually eventually got a better number from JCT, because they were able to take into account base erosion that was happening at the corporate level. So once they made that switch, we've been arguing since that, look, if you're able to take it into account at the corporate level and see that your tax base is shrinking, look at it over here on the personal level as well, to show the number of expatriations have gone up exponentially. So this should be taken into account over here, because if we're doing nothing, we're losing that tax base forever. So it's an argument that we've been pushing. I don't know if they've been as receptive yet as we would like them to be, but I think the fact that they were able to do it for corporations and take that into account for them, it should be done for individuals as well. There's a logical argument there.
I'm going to go to another question. I'm not way ahead on myself assimilating these questions, so these are pretty much unvarnished, as they should be. So the next one is headed non-resident new legislation. With regards to property abroad, I have lived outside the U.S. since 1988, and where I live, I have private property. If I sell it with a gain when the bill is approved, does the no tax rule apply even if the property was bought prior to the new law? Were you able to follow that?
I think so. So this individual has lived abroad for a significant period of time, right? Has bought property back, say, the 80s or whatever, and if they would sell it after the law is enacted, did they have to pay the gain? Did I get that right?
Yes. Yes.
Okay, so as the bill is written, they would have to pay tax on the amount of gain that would be attributable to the period before the law became enacted. Similar as they would for current law. I mean, they would pay the gain and then be offset with foreign tax credits and all of that. So I think what I'll say to this is we understand that that is an issue and that could be a very large tax bill for a number of folks. And one of the things that we've been looking at is putting in place a transition rule for Americans that are already resident abroad to sort of mirror the fact, or to reflect the fact that a number of the assets that they've built up in this time that they've been abroad are for retirement or are for just basically living their life. And we would not want to clear out anybody's retirement life savings simply because they lived abroad and did not buy their asset after this law was switched. That's not in the current bill that was introduced, partly because of time. We wanted to get something introduced at the end of last session to really start the conversation and to at least have something to point to. And I think that is a step down the road that we're continuing to work on. We really wanted to make sure we get the base rule right before starting to add in some of those transitions. So while it's not currently in there, it's definitely something that we're trying to address as well.
Okay. Let's see. There's another question here. I'm not really sure I'm following it. I'm going to skip that one and come back to it if we are in need of questions. But let me go to another one. Let's see. I'm just going to read. I haven't even read this. I'm just going to read it out loud for the first time. Thank you for your presentation. Will this new bill also apply to exempting pensions based on foreign income, provided you qualify for the non-resident based requirements that you listed? So let me go back to that. Will this new bill also apply to exempting pensions based on foreign income? I'm not really sure what that's getting at. Matt, does that, can you dig into that?
I think if they're asking, will foreign pension income be considered foreign income for the purposes of this? I think the answer that we would like is yes. I believe that that's what they're asking. I don't know if I have that spot on either, but yes, we do want to exempt foreign pensions from U.S. taxation. Yeah,
that whole area of pensions and investments held within those pensions. There are a lot of difficult questions in there. Jonathan Lakowitz is sitting next to me here. He's the chair of ACA and very helpful in helping me juggle these questions. You want to pick out, you'll need to move a little closer to this.
Sure. Thank you, Matt, very much on behalf of all of us at ACA. I'll be speaking a little bit later on a couple topics, but I'm just going to choose some questions now that we've been receiving. One of the questions that's come in is, who do you think are some of the best possible co-sponsors from the Democratic side of the House?
So one big target we're hoping to get is Don Beyer, who is from Virginia. He was an ambassador, so he directly understands this problem. He's expressed interest in the area or in the issue, and him and the boss have traveled together before, have a pretty good relationship. So we think he's one that would be a really good target to get, especially then we have two Ways and Means members on the bill. I think that increases our chances of it getting a serious look and getting possibly hearings on this. So he's really high up there. Others that Dina Titus has one that has been really great on the issue, and we would love to get her on board as well. I've spoken with her staff a number of times, and they seem to be pretty interested. I had a list of these somewhere. Where did I put it is the question. Basically, any member of Ways and Means is always a really good bet. I think some of the folks in California will probably get this a little bit better than others. Possibly some of the folks in Washington, there's a big presence abroad from there. And I'm forgetting Susan Del Bene. She's had a background in tech, and she understands sort of the transient nature of folks in that space and the need to get folks in a more multinational role within their companies in some of these tech companies. So I think she'd be a good one to target. And some of the others that we've been sort of approached about have been Jamie Raskin and Carolyn Maloney, and she's the chair of the Americans Abroad Caucus, or there's some sort of caucus that she is a part of that deals with Americans abroad. So I think she could be possibly another good target for us. But we are also open to suggestions because you guys might have good relationships with any of these offices or just anybody. And we're hoping that we can lean on some other folks too to bring us in some good offices that want to partner on this.
Right. And this, as we all know, is an ongoing process. And so we all just have to push. And how successful it is really depends upon how good we are. Jonathan.
Okay. So there was a bunch more questions. Charles has asked me to ask just one more for now, so I'm going to layer it. So there's been a number of inquiries around hearings and when a new bill may be introduced this Congress. So as part of the hearings questions, things, for example, what can ACA, other organizations, or the public at large do to help Congressman Holding and yourself as you prepare for hearings and as you look at the next draft of the bill? And do you expect in this Congress the bill to be introduced or there to be hearings taking place?
So I think we'll start with the bill being introduced. Yeah, we are hoping to get that introduced again here relatively soon. A few more things we just need to square up with Leg Council, and knowing that what we put out is not going to be probably perfect, but at least something will be out there that we can point to. I think that's our goal here, is to try and get something out at least spring, early summer at the latest, to really then use that as the launching point to both gather co-sponsors in a bipartisan way, as well as then use that as the vehicle to ask for hearings. It's much easier to try and ask for a hearing on something when there's actually an idea out there. It sort of can give them a place to start. So I think once that bill is introduced, ACA and you folks can really help both ask members of Congress to co-sponsor the bill, or at least reach out to our office saying that they want to work with us further in either putting together another proposal or talk to us so we can alleviate some of their concerns about the current proposal, as well as then asking those offices if they're comfortable to ask the chairman of the Ways and Means Committee for hearings. So I think once we get a bill out, that becomes a little easier. And then from your guys' part, that ask could be twofold, both sign on and ask for hearings.
Let me insert this. Has there been any back and forth with the Treasury Department on the subject of taxation of Americans abroad?
It's been a little bit, and most of our recent conversations with them have been on implementation of TCJA, tax reform. And when we've talked about Americans abroad with them recently, it's been in that context of how are you guys going to deal with them under GILTI? Because we know that's been such a huge problem for a number of Americans abroad, and even companies in the United States that are set up differently. So with regard to residence-based taxation, it's been a while since we talked to them about it. They seemed open enough to the idea, but their focus right now has been sucked up totally by implementing that new tax law.
Mm-hmm. Okay. I think if you go way back, meaning 2 years ago or something, there were good things said in some of the budget materials produced by this administration, saying that they actually favored switching over to a residency-based approach.
Yeah, and I know some of the other groups have spoken with administration officials as well, and there does seem to be an openness there to look at this, which I think is positive. Again, this seems like, just have been doing this so long, this seems like a no-brainer bipartisan issue since the rest of the world has figured out how to do it, but it gets bogged down sometimes, so as you guys know.
Yeah. All right, I'm just looking back here. Let me see. Give me a moment to speed read something. Well, this may be question impossible, but it is, what is the anticipated timeline to present the bill, and if it does pass, when it becomes legislation? So blended in there is a little discussion about effective dates, I suppose. You want to say something on that subject?
So again, introduction is, we're hoping soon, where we're just really making sure we have the last little bit that we can be tightened down with legislative council before we get it introduced. And then if, say, this were to become law, implementation, that's trickier to say, because while this bill is sort of ready to go, we know that there does need to be transition rules around this that we'll have to discuss in any sort of markup or run up to this bill actually being implemented, so, or being enacted rather. So that's something that we're also looking at, aside from just the Americans already abroad piece, but how does this, we're also looking at how does this interact with 9/11, and how do we use 9/11 basically as an on-ramp and an off-ramp for this thing to make sure folks aren't caught in a half year where they're in between this, between being able to opt into 9/11A and they're under 9/11. So there are other issues of implementation that we are still working through with JCT that they're not in this draft, but they are certainly on our minds that will then ride along with this as we move forward. So I don't have an exact answer for you there, but other than to say we'll try to make this as smooth for folks as possible.
One last quick one. There's nothing in here about gift and estate taxes. Any thoughts on that subject?
There's not yet. I think we, at this point, sort of just had them taxed as all other Americans are taxed, but it's not really an area where JCT has raised a real concern yet. So if something pops up, that could change, but so far they've not been, that's not been their main area of worry.
Okay. All right. Questions continue to come in by email and also by something called a chat box on this software. I think this would be a good time to break. With apologies, great apologies to people who have sent in or continue to send in questions that we have not gotten to, but send them in. We will get them. We'll try to deal with them. We'll definitely forward them to you, Matt. And are you amenable to giving them your email address?
Yeah, absolutely. I mean, I'm not too hard to track down. So it's just Matt Strauss, matt.strauss@mail.house.gov.
Excellent. All right. Thank you.
So yeah, anyone can reach out, and I'll be happy to try and answer more of your questions, or at least try and get some answers from JCT or Ledge Council, maybe somebody above the chain if need be. So yeah, please feel free to reach out.
Okay. Well, thank you very much. There's some expression either in French or Italian or something. Thank you 1,000 times over. And so we will turn now to different parts. You can certainly listen in, that would be fine. Or if you have one or two things to do at the office there, that's understandable. So what we're going to do now is turn to some other subjects. And three people will speak to those. And in what people have, the notice, the information was sent out to people. This it's a type of agenda. They have it. So the next subject is what this proposal means for attorneys and return preparers. And Stefan Lagonico is going to speak to that. Again, Stefan's biographical information is posted, as is his picture. But I can tell you that Stefan is an attorney here in Switzerland, Bernard Lawson, up the lake in Lausanne, and he's very familiar with this subject, having worked with, banks during the Justice Department program, and of course voluntary disclosure, and this, that, and another thing. Stefan, why don't you move over here closer to the machine?
Thank you. So this is Stefan. Hello, everyone in the room here in Geneva and abroad listening in for ACA. When Charles asked me to look into what this bill would mean for attorneys, accountants, and return preparers, I first had to do some research and look at numbers. We always start with numbers. And there's, according to ACA, there are about 9 million Americans overseas. So this is a large figure. This is something that encompasses many types of Americans. You have members of the military, you have diplomats, and of course you have, the non-military, non-diplomats, and that's a cohort of about 5 million individuals. Now, 5 million is plenty of people, and if we take even half of those, or half of the half, that's still 1 to 2 million pool of people that will have the same questions that we all have today, and that you may you may be looking into while you dig into this this bill, which opens up quite a lot of questions actually. On the other side of the equation, we have about 250,000 professionals. So these are advisors working on tax returns in general. There's 26,000 attorneys. There's about 175,000 CPAs. There's 50,000 enrolled agents. And of course, not all of them are focused on Americans abroad. I've always been mesmerized by the small amount of lawyers and CPAs who really understand what the situation is for an American who lives abroad. Actually, most of the lawyers and my colleagues in the US and CPAs I speak with when I have a cross-border situation tend to not be familiar with international rules and tend to look at only what matters to them and their pool of clients. So this is scary but encouraging. It means that there's plenty of room for professionals to develop a practice focused on Americans abroad and to delve into this bill and the consequences that it will trigger. I don't think anybody's going to run out of work. On the contrary, there's going to be plenty more work. We think here that every American abroad should be interested in residency-based taxation. This is a subject that will that will pick up momentum. If the legislation is enacted, it's actually highly likely that the effective dates and the transition rules for people will kick in very fast. Typically, the date of enactment is when Congress passes the bill, but it's possible that it will be effective for the next fiscal year, or even for the current year, when there's situations that will tend to become dual situations or split years questions. Of course, this is not looking at a crystal ball. This is looking back at the Tax Jobs Creation Act, where effective dates were immediate. For instance, the territorial rules for corporations. Now, there was even some reaching back, and we, quite frankly, do not expect that there will be a large amount of time to prepare for this. So this is why I think it's now is the time for the return preparers and the attorneys and the CPAs and the enrolled agents to start looking into this bill, because the more you let time pass by, the more details will come out. Remember the voluntary disclosure programs, remember FATCA. If you don't pick up the ball as it rolls slowly in the beginning, then you cannot catch up with it. There's too much information that's out there. So really, all colleagues around the world don't have an oh my god approach to this. This is not the end of your practice for your clients who are Americans. On the contrary, this is much more work for you. There's going to be a real wave of questions like volatility in your tax, your usual tax matters that will pick up, and people will be needing a lot of advice. So as we say in French, because Charles likes French expressions, this is not the opportunity to jump out of the window, but rather it's the occasion to open your window and let people jump into your practice from the outside. All right, so yes, Americans overseas, you're taxed now as per your US citizenship, and of course, it's quite different from resident Americans, so those who reside in the US. And it's also different from the non-resident aliens who are prone to US taxation on their US source income. Now, in general, the population of Americans overseas will probably be taxed more like a non-resident alien. So Charles, who still likes metaphors, told me, well, you got to think of it as if all those Americans overseas are on the boat, and some of them are on one side of the boat, the other ones are on the other side of the boat, and it's only going to be people moving from one side of the boat to join the other side, which is where the non-resident aliens are located. There's still going to be the same amount of people on the boat. It's just going to change the tilt, but your clients, the passengers, are just going to be as numerous as before. Under the residency-based taxation, Americans overseas will become non-taxable under their foreign source income, and they will remain taxable under the US source income. That's the cardinal rule, the one you can always go back to. Now, there's going to be plenty of developments, plenty of smaller points that will or will not become big for you and your clients. Here's about 5 or 6 of them. What is US source income? So what is non-US source income? Can US source income become non-US? What are the rules for residency? What are the rules for taxing US-based investment income, so capital gains and interest income? What are the effects on FATCA? It's not repealed by the holding bill, and probably not repealed under any bill. There's accounts that are currently owned by US taxpayers. What if that person is no longer a US taxpayer? What are the requirements to identify that person for their reporting, the withholding? Would it change or not? And finally, what are the interactions with other existing provisions of the code? Subpart F, transition tax, GILTI, pass-through deductions, PFIX. All those will have to be defined, explained. There's going to be pros and cons. I think we heard it before. A lot in the bill has not been written for the moment in order to get the process started. Quite frankly, there may be changes. This is not the final version. And all those tiny subjects, which are certainly very important when you advise clients, will become subjects of their own.
Now, looking back, over the past 10 years, the IRS has been running voluntary disclosure programs, and these have been in constant evolution since then. There have been changes, in average, every other year, approximately, and this is certainly going to continue in the future. Now, still, there are a few core principles which will probably continue to prevail in the future. The first principle is you always be better off if you do voluntary disclosure than if you get caught. This is common sense. Second core principle, in order for your disclosure to qualify as voluntary, the IRS needs not to know about your situation before you do the voluntary disclosure. And this is particularly relevant nowadays because keep in mind that banks all around the globe, banks are sending a lot of information on an annual basis to the IRS on the basis of FATCA. So maybe you think the IRS doesn't know about you, or maybe you think the IRS doesn't know about your, foreign bank accounts, but in reality, the IRS knows everything because your bank already gave you up. Now, the third core principle is there's, in the IRS voluntary disclosure system, there's a clear distinction between willful tax evaders and the tax evaders whose non-compliance is non-willful. Different procedures and different price to pay. At the moment, non-resident US citizens who are non-compliant and who do a voluntary disclosure pay zero penalties, don't pay any penalties if they were non-willful. And there doesn't seem to be any intention to change this, hopefully, but we think that probably in the future it will become more and more difficult to qualify as non-willful, because the longer you wait before doing a voluntary disclosure, the more difficult it will be to demonstrate that you had no idea what you were supposed to do according to US tax law, unless you were living in some kind of a desert island with no Wi-Fi. Now, let's say a couple of words on the willful tax evaders, these bad people. Looking back over the past 10 years, I think their position has never been enviable, but it seems to me it has never been as bad as it is now. Over the past 10 years, the IRS was running the offshore voluntary disclosure program, where you could basically buy your return to tax compliance by paying a fairly high price. In reality, you were paying a lot of money in terms of penalties, but you were buying more than tax compliance. You were also buying certainty, predictability, and comfort, at least in three respects. First of all, you knew that you would not go to jail, which is more than a detail. Second, even before coming into the program, you could calculate the exact amount of taxes and interest and penalties that you would have to pay. And third, even before coming into the program, you knew exactly what the process would look like, what would come in the beginning, in the middle, and at the end of the process. And you knew exactly what information you would be asked to provide to the IRS. So basically, there were no bad surprises. And that gave, our clients a lot of comfort in a process which is, by definition, very stressful. Now, the IRS closed the program last year, and it replaced it with something that is called the voluntary disclosure practice. And this practice seems to be quite a loose thing. And it seems to us that you're losing a lot in terms of these certainties. You basically in the position of a mouse, which was deliberately surrender to the claws of a cat which may or may not be cruel, but a cat that is certainly very hungry. So to sum up, no good news for willful taxpayers. Now you may say they don't deserve good news, but I think that's another debate. Thank you.
Okay. Thank you very much for that. You're absolutely right when you say that the holding bill does not speak to this subject directly at all. But it is known that if this goes into law, there will be a lot of people. Stefan gave you some indication of the numbers. There will be a lot of people who may very well want to get within the new regime. But there'll be a number of them to get within the new regime. They will have to catch up, and then that will bring all these subjects to the fore. So let's turn to the third subject, last but not least. What would this legislation mean for investors and investment advisors? And here Stefan Laganico is going, not Stefan Laganico, Jonathan, Stefan, you're finished, thank you. Instead, Jonathan Lakowitz, who happens to be chair of ACA and is very familiar with this this area, which includes a lot of not just tax law, but very importantly, other law. Jonathan is going to speak to this.
Charles, thank you very much, as well as thank you very much to the members of ACA, the supporters from all of the international communities, and to my co-members on the Executive Committee of American Citizens Abroad. These issues of especially taxation for overseas Americans is something we've all been working on for decades now. It's no longer years, and we're extremely happy that Representative Holding and his staff have taken this issue, and I'm very proud to be a part of the movement moving things forward. So in addition to my volunteer work at ACA, my day job is as a cross-border financial planner and investment advisor, an independent firm working with hundreds of overseas Americans on the various challenges that they have in their daily lives, trying to stay tax compliant, trying to deal with international financial institutions and their compliance departments who don't always have a friendly understanding of rules and regulations. And so being on the front lines of these issues, Charles has asked me to talk today about what are some of the potential impacts on residency-based taxation if this bill or something similar comes to pass, which is of course something that many of us would like to see. Well, first of all, this bill or anything like it will not solve everybody's problems for overseas Americans. For some people, like every other tax legislation, we will see that they may not have tax returns to file. Life becomes quite simple. For others, it may become more complicated. But essentially, what you see is that people will be divided into a number of categories. You're going to be having American taxpayers. U.S. citizens, if they live overseas, are still considered resident for tax purposes. Under the new regulations, Americans may elect to stay being treated under the current rules because for their situation that may actually be better. We'll have this new category of qualified non-resident citizens. For many people, being a qualified non-resident citizen will be a better situation. I would say especially for employees, lower income to middle income individuals or families, and for those who've never lived in the United States and so don't have things like Social Security, retirement income, or perhaps investment income that's US source. You're going to have green card holders. Ironically, thousands of green card holders actually live outside of the United States for a period of time. It's clear that this bill will not benefit them at all. They will still be considered residents of the United States for tax purposes. You have non-Americans. just today, this should not change anything for most non-Americans. You also have former Americans who are affected by this type of legislation. For example, former Americans can't take benefits that are in U.S. income tax treaties with the United States. So whether you're an individual investor or working with individual investors, understanding which category you're in, and maybe which category your spouse is in, who may be in a different situation, you'll have to try to see what is the best for you going forward. Some of the different categories where this is going to impact may come down to just the type of investments. Do you invest in stocks inside or outside the United States? Funds inside or outside of the United States? Stefan mentioned the issue of sourcing. What's considered U.S. source income? If I buy a U.S. fund listed in Ireland today, that changes its character to non-U.S. source, even though all the underlying investments are U.S. companies. So there's a number of different questions that come out, and overlaying the choice of investments are not just tax law, but securities regulations, MiFID in Europe, Swiss securities regulations, the US regulations, and how all the international banks and custodians react. Do they even allow you to buy what's good for you? We unfortunately see a lot of firms restricting the purchase of different types of investment products in the name of protecting individual investors, when in fact it may cause them some harm. So what may have seemed simple, what investment product you choose, becomes a more complicated question going forward. The transition rules, whether it's going to be necessary or worthwhile realizing capital gains. Matt spoke a little bit earlier on the subject, but I think there will still be some more questions as to how capital gains may work, especially during the transition period. Individuals may find themselves changing status over their lifetime. If you're an expat, you may go in and out of the system multiple times. I think one of the overarching issues I see is that if you are an individual investor, you work with a professional advisor to do your investing, or you're a professional working with individual Americans overseas, you almost have to become a tax expert. For me, this happened by default or by choice. I hang out with a lot of the professionals who this is their profession, but I don't think it's going to be possible to serve Americans overseas well without a very detailed understanding of the tax regulations. Any investment gains you may get may easily be taken away by simple tax mistakes. Okay, some issues here that are a little repetitive, so I will try to move ahead. I think one big question that I have, I don't know if Matt's still on the line, maybe he can answer afterwards, but one big question comes up as to treaty elections. Will the new qualified QNCs, if you will, qualified non-resident citizens, be able to benefit from treaty elections the same way a non-resident alien would in the specific country that they're living and working in? I think this is a really big question out there in helping people to determine whether it even makes sense to consider the new status or not. Firming up those definitions on the sales of personal property, things like PFICs, being very specific on retirement accounts and wrappers. If retirement money is wrapped inside, like an IRA account in the US is considered a trust, so too are many foreign investment retirement plans. So any clarity we can have for individuals on those situations. Also not addressed were things like US citizens, as opposed to corporations, have to use the dollar as their functional currency, as opposed to being able to operate in the currency of the country they live in, forcing phantom gains on retiring mortgages or other debt and things like that. there hasn't been much talk and certainly lots of questions of, in reporting foreign accounts, for the qualified non-resident citizen, is a foreign bank account in the country that they live in still considered foreign? I think this is a critical issue for banking and institutional access, as we've seen many institutions overseas denying access to American citizens. If all of a sudden their banking interest or things like that is no longer interesting, and they have this new qualified non-resident citizen status, could they present this essentially to the foreign financial institution and hopefully no longer be denied access to financial services? I think this is an important reason why this issue has been brought up along with FATCA, and any relief that can be addressed there, of course, would be helpful. PFIC rules. PFIC rules are a nightmare today. The transition rules on disposition of PFICs would be very helpful to understand. What else? Okay, so I think at this point, I'm going to stop. I can probably talk about this subject for much longer time than we have. Again, I'd like to thank everyone who's been participating in this very, very long process, and again today. Charles, thank you very much for organizing the session. We'll be doing this again tomorrow. And again, thank you to everyone online for taking all your time this afternoon and evening.
Okay. Well, Jonathan, thank you. Especially grateful for someone to talk about the securities and other regulatory issues, because frankly, I don't know a thing about it, and I really don't want to learn about it. So it's very helpful to have you there. With that, the executive director of ACA was going to be here today, but she was coming from Madrid, and the airplane was not quite ready to fly when she wanted to fly. So I don't know what happened, but I know that she was not able to get here. So I'm going to just very quickly say some of the things that I think she would have said. Something about ACA. As some people may know, others don't know, ACA is really two organizations, American Citizens Abroad, Inc., and American Citizens Abroad Global Foundation. The first, actually, Jonathan is chair of that, so we're lucky to have him over here to my left. And that is we call it the advocacy group. Another word for it is a lobbying group. So we will be pushing, ACA will be pushing strongly for this legislation, and that's going to take us in the direction of registering under the lobbying rules. The other group is American Citizens Abroad Global Foundation. That's more educational, and I'm actually chair of that. And so we're all here in the same room. Education, including things like conferences years ago in Canada, with which Jackie Bougnon, who's joined us today, actually ran those and created them and made them happen. So educational on conferences like that. Also, very importantly, more recently, working on revenue numbers. Some people know we the foundation funded and then conducted research on the basic data on Americans overseas, the so-called baseline data, and then we're able to start running some call them informal, unofficial revenue estimates on all these proposals. Highly useful. And the foundation runs things like this program, and we're going to be running more of them. In fact, we're probably going to be running ones like this in 7 or 8 different jurisdictions in the coming weeks and months, and doing other things. So that's the quick introduction on those two entities. I think the next thing that Mary Louise would say is join. People should join ACA. Most of the people online today actually are already members, but a number are not members of ACA. So join. Not only join, but also get active. The getting active is actually more important than the joining. You need to do things. If you step back from the subject of getting this bill enacted, it really is going to depend upon what we do. If we do nothing and wait for somebody else to do it, I don't think it's going to happen. So people need to really get active and pay attention to ACA. We'll help you find out how to do that. This bill is very important. It breaks ice, but it is, as we used to say in my high school, this is not a done deal. However, what the bill shows and what you're seeing and how it was talked about today, I think it shows it is a doable deal. And whether it gets done depends upon whether people get out and push. So enough of all that. Well, thank you, everyone, and look forward to hearing from you and perhaps meeting some of you who are online in person one day. Thank you. Good night.